Hey yo, what's poppin'? Sorry, I think I blew. It just went fully red. My bad. I'm feeling super good today, man. I don't know if you guys could tell already, but I'm feeling super high energy, man. I'm sorry if I blew your eardrums out, fam, with that one. But man, I hope you guys are doing well. I'm doing fantastic, feeling great. And so I decided, you know what, I have a lot of energy. Let me record another video. So I hope you guys enjoyed the previous EU video. And besides that, if you guys did, if you guys are new to this channel, first and only link in the description section below. Sorry, man, I'm tweaking right now, bro. I have so much energy. First and only link in the description section below will lead you to my public free, everything's free, I don't want to do paid stuff, AKFX Telegram channel, where all of the trades that I'm talking about, that I've taken, of course, actually, the proof of me actually taking that, you'll find it on the Telegram. Now, at the same time, if I see, you know, a number of people telling me in the comment section, or a significant amount of people in the comment section telling me, Avi, I don't think you posted it, or Avi, I can't find it in your channel, no worries. I will go to my AKFX Telegram and pin it all, you know, put a little full stop there so that you guys can see it and you guys can, oh, okay, yeah, that was what he was talking about in the video today. Okay, I understand. Thank you, Avi. You know what I mean? So don't feel free to tell me stuff, you know what I mean, in the comment section if you can't find something or some kind of, you know, material on my Telegram. But with that being said, guys, if you guys enjoyed this video, you'll find out in a bit. And leave a like if you wish to, leave a dislike if you didn't like it, and let's get right into it, man, without any further ado. So today we're going to be talking about this buy that I had here, why I placed another buy here, and how I placed that other buy, because this is a very I don't want to say it's a very advanced way of entering, because advanced is very subjective. If I've learned it right off the bat, then it's not going to be advanced to me, but it is something that is very different. And it is something that I don't use very often, but I did in this instance, and I want to share it with you guys. Okay, but besides that, let's get right into it. So, okay, I looked for a buy here, and I want to go over, whenever I'm talking about these videos, guys, understand where, number one, where I have placed the entry, why I have placed the entry at that location, right? What other possible locations could I have placed the entry at? Because that allows you in the real world markets to be like, oh, Avi, look, this low came and stop hunted, broke the structure, strong low, weak high, inducement here, and Avi, you bought here. Okay, but what about this area? What about that little area in there? It's still being induced. You're able to understand. You know what I'm trying to say? So, okay, understand the possible other areas that you could have entered at as well. And what's the other thing? Oh yeah, where am I paying myself? Where am I taking the profit? I mean, you took a trade, right? You're in the money, but you didn't pay yourself. You know what I'm trying to say? What's the point of that? So you got to understand, number one, where I'm placing the trade. Number two, why I'm placing the trade. Number three, what were the other possibilities? What could have been the other possibilities? Think about that, because in the real world markets, you're not just going to be seeing one area. You're going to be seeing multiple areas and you may get confused, right? And of course, number four, where you're going to take your profits. All right, cool, easy. Let's get into this. Now, I'm going to hit to the daily time frame because I'm not familiar with this chart. I've literally just turned on TradingView and be like, okay, you know what? I want to show you guys this entry. So I'm going to turn on to the daily, just make sure everything's recording well. And let's just see what I saw, because I'm trying to, you know, refresh my mind, if you will. Okay, cool. So, what I'm looking at right now is basically the daily time frame, and just from the daily time frame, you're actually able to decipher structure as well as liquidity, more so liquidity in my personal view. And what you can decipher from here is, let me actually just get my brush out and red, right? That this low right here was responsible for a stop hunt. Okay, now whether or not it caused a break of structure, I mean, it very obviously did, but whether or not it caused a break of structure in a low time frame, we'll find that out later. But it's a great start that we found ourselves a low that was responsible for a take on liquidity. Why is that so important? Well, because a low that's responsible for taking liquidity is the first and one of the most major criterias in a strong low or a strong high, right? The higher low has to take liquidity, okay? And then of course break structure. You see, similar to this one, this low, taking that liquidity, and also in fact taking this liquidity. See, some people may say, oh guys, it's equal lows or relative equal lows. It's not relative equal lows. It nicked that liquidity, and that's why we had such a reaction, such a 90 pip reaction, because we took that liquidity, right? So it's not just relative equal lows. I mean, again, that's my personal opinion. I'm not FDA approved or whatever, you know what I mean, FSC. I'm not a financial advisor, you know what I mean? So do what you want to do, but I'm just telling you guys what's valid to me and what isn't valid to me, you know what I mean? Those aren't relative equal lows to me. Though that is a low that nicked liquidity very clearly. And you see how in the next candle, right, we shoot off from there, baguette. Okay, so yeah, that's what I'm trying to say. And just a little bit of an example, you can see how this high was responsible for taking the liquidity here, right? And you can see in the next candle we sell off. Why do we stop here? Because we come to an area where this candle took the liquidity from here, right? So that could be a potential obstacle. Again, you can always, have a confluence with it on the lower time frame. You can see over here as well, this low taking this liquidity, lower time frame for sure going to have a bullish breakout. You can see this next candle here shoots up in a continuation. Of course, that was actually just an inducement for price to come back down. Why does price shoot back up though? Because this area, this entire area in here, right? This entire area in here was responsible for a stop hunt, a take on liquidity, and of course a break of structure. But again, this is not me just talking about candlesticks over here. We'll get into the actual things. I just want to show you guys on a big time frame. Look, on a big time frame like the daily, why I was even kind of interested in this area here, because it took that liquidity. Okay, now I'm going to head over to the 4-hour time frame. I'm going to show you guys the bullish QM that you can find over there. I'm then going to follow up with the 1-hour time frame, because that's actually what I originally looked at. So yes, let's go to the 4-hour right now. Okay, so what I want you guys to focus on is the trade that I took, which is right here. Boom, this area. And why did I take that? Well, you guys can very clearly see I'm not going to bother drawing it up besides just using the drawing pencil tool, right? Took that liquidity, and at least on the H4 we can see we have a high, a high, lower high, and this is the last lower high that caused the stop hunt, and then she breaks up. And then what do we expect next? After this, hold on, after this, what do we expect next? An inducement, right? So let's talk about that in a second. So I hope you guys understand that. And guys, listen, I think two or three videos back, I always mentioned this. Hold on, let me move the mic away so I can type a little bit more efficiently. All right. After, QM is made, there will always be a new POI. A new POI will always be created. It always will happen. Every time price nicks liquidity, breaks structure, always price will create a new POI. Rest in peace, Hamdi Zuka. He's the person who got that thing in my psychology. Some of you guys may be like, that's just common sense, Avi. It took liquidity and it sponsored and caused an imbalance. Of course, yes, but how many of you guys thought about that from the get-go without anyone else, intervening? So I have to thank my brother Hamdi Zuka for putting me onto that not even that strategy, that mentality, that psychology, that way of thinking where it's so simple. Every time price takes liquidity, breaks structure, it just know that there's going to be a POI. If you miss it, you missed it. You know what I mean? There's always going to be a POI. So anyway, let me come back to this. So as you can see, right, we took the liquidity, boom, broke the structure, simple. Now I want to look for the inducement, and as I said, on that very day, I actually looked at the H1 time frame. So let's go to the H1 right now. Okay. And you can see right here, it's just a little bit more detail, in comparison to the H4. That would be your break of structure on the hourly. It doesn't matter if you mark this or you mark this. It's still, a high that was responsible for a low, high that was responsible for a low, and that low that took the liquidity. Okay. Broke that structure to the upside. What do we have? We have ourselves our inducement. You guys should be able to mark the hell out of these charts. Simple. You know what I mean? You're not. Let me take a sip of it. Oh, by the way, I have some proper chai today. It's been a while since I had chai. I actually cut tea. Usually I take 2 teas per day, or 2 or 3 teas per day, which is a lot every single day. But I cut home tea at least for what, 2 months? Is it now 3 months? I don't know. It tastes so damn good, bro. You guys have no idea. It tastes so good. Anyway, let me come back to this, man. But gosh. All right, so how did this happen? Well, very simple. Now, I want you guys to understand a little bit of my psychology as well. I do know something. I do know that this high was responsible for a take on liquidity and a lower time frame break of structure. However, this guy is going to be my target. If I get into a successful buy, right, is going to be my target. Because if I'm getting into a buy, what does that mean? That means I'm looking at the market from a bullish perspective, from a buyer's perspective. That means what? That means I have bullish confluences. Am I right? Hold on. I'm looking at the market from a buyer's perspective, or from a bullish perspective with a bullish scenario. Doesn't that automatically mean that I have bullish reasons to even think about a bullish scenario? I gotta have bullish reasons, right? Okay, cool. So you guys understand that. if I look at the market from a bullish way, I have bullish reasons. That's all that matters to me. Does it make any sense for me to start selling in here, selling in here? To you and your strategy, and I respect you guys. I don't know about you guys, but for me, it makes no sense. It makes no sense, for me to be selling in here. No sense for me to be, oh, look, this is another great one. This one here, right? Even though it went up and then failed and took the liquidity, it still makes no sense for me to sell in here. Because if I sell down in here, oh wow, look, I'm in profits of like freaking 15 pips. Boom, she gets ran through. Like it's freaking fake taxi. You know what I mean? It gets taken off, right? So for me, I'd rather get into logical trades than me, you know what I mean, just getting into trades wherever. You know what I mean? I need to understand that. Yo, I need you guys to understand that. So, okay, cool. Now I want you guys to know this break of structure here, this take on liquidity and break of structure. I'm going to go to the 4 hour again. Give me a second. I want to tell you guys before I change time frames, because you guys sometimes may get a little bit confused, so I can understand. You can see we have ourselves a 4 hour POI. What did I tell you guys about, you know, taking liquidity, breaking structure? You're always going to get yourself an imbalance, some form of a point of interest. Okay, we have ourselves a bullish OB or a demand candle. Simple. Next, we go to the 1 hour just to see some more refinements of that area, of that range, right? So in that 4 hour bullish OB, we have ourselves a 1 hour bullish OB and another 1 hour bullish OB, or just demands, whatever you wish to call it. It's the exact same thing. It's drawn sometimes a bit differently and there's more detail in the ICT way, but they're the same thing and they serve the exact same purpose. It's a point of interest. And so yeah, those are the two areas. Now, which one do I choose? Now, do you guys understand? This is that third part I told you. You guys. You guys already know the where. You also know the why, and the why is because of that liquidity. Thanks to, you know, all of this stuff is the why. The where is the why. You know what I mean? And the third thing is, what are the other options that you have? You have that one, and you also have this one. That's all within the, again, 4 hour bullish OB. Let me go back to the 1. Okay. Now I don't know which one. Again, guys, don't fall for these tricksters, man. About, you know, oh, I know exactly price gonna trade you. You don't. Right? You'd like to think so, but you don't. So what do? I add confluences. Let me talk to you guys. Give me a second. Let me just delete this to make it a little bit easier. I add confluences. Now, before I talk about the confluence that I added, which is just simple, it's nothing magical. It's just simple ICT kill zones, time and price. Very powerful, very powerful. It's nothing magical, but powerful, right? What I know is when price enters into this area, I know that I'm going to do one of two things. Either, number one, wait for a bullish QM to form, or number two, take an immediate entry. Now, I also know, and I'm completely comfortable and accepting of the fact that if I wait for a bullish QM to form, it does not confirm, right? Check my words here. It does not confirm that price is going to return and respect that little stop loss that was formed from the little small time frame bullish QM. It doesn't confirm that. It could do exactly what it did here. Form a lower time frame bullish QM, you guys will see that in a second, come back and completely stop it out and then go. It can do that. Who the hell said it can't do that? No one said it can't. You don't know. You can hope. You can have more things on the side of probability, which is good. You can have a higher winning odd, but that doesn't confirm it though, does it? So I want you guys to get comfortable with that aspect. Give me a second. Let me take another sip of my chai real quick. Mamma mia. Okay. What did I do? I decided to take an instant entry. Reason being, we were in a London kill zone. Now, another thing I do want to indicate, guys, all my previous videos where I've talked about the London, New York kill zone is just purely based off of ICT's YouTube videos. So if you guys want more detail about that, go ahead and check ICT Inner Circle Traders YouTube channel for more detail and information on time and price. However, now there's some GMT time shift thingy where all of the times of the kill zones, whatever, it doesn't matter if it's London or New York, all the kill zone times are 1 hour forward, at least in my time. It's 1 hour forward, if I'm not wrong. Some crazy stuff like that. If you guys are asking me personally, right? Now you guys can call me dumb for this. You guys can call me whatever for this. But I'm telling you, I'm sharing with you guys, right? My own thing. I completely neglected that. I completely don't care about the whole, the kill zones are now one window ahead. 1 hour, ahead. I didn't care. So for example, if the London session, which usually starts at 2 p.m. Malaysian time or 2 a.m. New York time and lasts until 5 p.m. Malaysian time or 5 a.m. New York time, I just stick with that. I don't care that it's not starting at 3 a.m. instead of 2 a.m. You can. It's good. It's better if you do. I just didn't care because, again, kill zones are nothing more than a confluence to me. That's all it means to me. But if it means more to you, go ahead and do your own thing, man. So what I did was I said, oh, okay, London Open, London close, right? We have that 2 p.m. Malaysian time to 5 p.m. Malaysian time, or 2 a.m. New York time to 5 a.m. New York time. And all I did was just multi-time frame the hell out of this zone. Let me show you guys what I mean. We have ourselves a 4-hour bullish OB in this exact same area. We have a 1-hour bullish OB. Let's go to the 45. We got a 45-minute IPA candle also in with that little bullish OB. Cool. Let's go with the 30. We have a 30-minute bullish OB in the same area. Let's go to the 15. Now, here's where it would make more of a sense. It would make more of sense. Excuse me. Let me reiterate that one more time. It would make more sense for me to go boom as a refinement in comparison to me going boom. Because I don't know if price is just going to react within this IPA. It did, but I don't know if that's going to be the case. So if I'm talking about a refinement, you can see, I'm going to go to the 30 real quick. You can see how the 30-minute, the 45, the 1 hour, they were all in the same area. They have the same open and close, right? They have the same open. But when I went to the 15-minute, right, I was actually able to refine it to the last sell candle before the buy. Now, let me go and mark that. So it's more refined. It doesn't mean it's, you know what I mean? It's more refined. Okay. Now, again, if you guys want a little bit more detail, you guys should definitely watch some like supply and demand videos, some ICT videos on how the entire construction, the entire creation of an order block, how it has everything to do with OHLC, open, high, low, close. So basically, price opens here, makes a high, makes a low, closes in here. And so this third candle, the one that comes and engulfs the high of this down candle, that is what validates this as a bullish OB or a demand candle. Now, there are more slight twists and turns to this, but that's my personal understanding, and that's what I'm here to share with you guys. I'm here to share with you guys my own personal understanding on this market. So that's exactly how I marked it. It was the last sell candle before the buy. But you guys need to understand, this is perfectly quote unquote fresh, or a better word for it would be unmitigated, meaning price never came back and mitigated it, because this candle here was what validated this is a bullish OB. Now, if this candle, what my cursor is on, came back and touched it, that would be mitigating it. You know what I mean? So yeah, I hope you guys understand that. So anyway, price comes back and I bought it there. Now, Avi, what is your stop loss and why is this outside of the kill zone time? Now, this actually, while it is outside the normal regular kill zone time, it's actually not outside the whole 1 hour shifting. So if you were to do the whole 1 hour shifting, we'd make that a 3 a.m. open and then a 6 a.m. close. Right now, you can see how it is indeed within that London kill zone. However, if you were to just incorporate what I did regularly, this outside of after the London close, if price rallies, that's still considered a rally because of higher volatility due to a closure of a session. Right? That's again, this is my own personal understanding. I could be right, I could be factually wrong. I don't care. It works and it's making me hella bread. So that's what works. You know what I'm trying to say? So that's it. So I consider this a London close trade. You know, I find, or at least I've observed that there's a lot of volatility. Again, shout out ICT, credit where it's due. A lot of volatility during the open of a session, during the session, the closure of a session, sometimes the overlap between London and New York session, as well as the New York open, the New York session itself, and the New York close, as well as around the 10 a.m. New York time reversal area. There's a lot of volatility during these many periods of time. And these periods of time, a lot of times, if you were to study it, they are responsible for different moves in the markets, for different price cycles, if you will. Get into that maybe further down the road. It's very advanced, in my personal opinion, compared to what we're doing right now. It's not necessary, but it is very helpful and powerful. And yeah, let's get back though. So, price heads in, you buy, and so price goes up. You can keep your stop loss down here. What did I do though? Let me tell you guys exactly what I did, and let me tell you guys whether it was considered safe, whether it was considered risky, what was going through my head, etc. and etc. So what I did was this. Okay, I entered right there, right? You guys know I entered right there, but my stop loss wasn't all the way down here. Reason being, I wanted to get a better RR, and I risked a little bit less because I did understand that. Let me get that right here. 2.5. Remember how I told you guys about the whole 2 pip 2.5 magic number, quote unquote? That's just usually what I use when I were to. It's literally the same entry model that I took right here. Do you guys remember that in the previous video that I uploaded on literally the video before this, right? I talked about the sell and how I went from the H1 to the 45 to the 30 to the 15 to the 5. We didn't go to the 5 because it wasn't actually there, like on TradingView, because I didn't pay for it. So we went as far as the 15, and I literally just took an entry right there with the 2.5, 2.6 thanks to spread, right? That's the exact same thing I'm doing right here. I just went from the 4 hour to the 1 hour to the 45 to the 30 to the 15. I found that. I'm happy with it. Enter right there with a 2.5, 2.6 pip stop loss because again, you have your spread and all of that stuff. And I called it a day. You know what I mean? And so what's my take profit? My take profit, I'll be very honest with you. Some of you guys want me to say, oh man, I just, held the entire thing, 100% of my thing all the way up there. Nah, my take profit was first right here, right? Went up, I went break even, right? After price broke the structure. Now, why this? Because price made a buy, a sell, it's a high. And every high and low above it, it's liquidity. So that's going to be my first target. That's already a 1 to 9, and we didn't even make 25 pips. In 23 pips, I've gotten 9 back on my 1 risk return. Meaning if I've risked 1%, I got 9% back. You know what I mean? So that's how it goes. And unfortunately, after that rally, price hopped back down and hit my break even. That's why I say it's very important for me to have a break even. However, if you guys didn't have a break even, you would have still been in the trade. Now, you guys do know, if you guys were checking up on my AKFX, that I did take a buy here as well. Now, why did I take a buy here and all of that good stuff? But I hope you guys understand why I took my profits here. If you want to be more conservative, you can take it here. But for me, that made sense. And then the next area that I was going for was right up here. Why? Let me show you guys on the 1 hour time frame and the 4 hour. So on the 1 hour time frame, you can see that this high is a production of this strong low. The strong low created the weak high that would ultimately be the target of any buys that were within this range. Let's go to the 4 hour and show you guys real quick. So on the 4 hour, you can see how we have ourselves a strong low, weak high, right? That's the model, right? It doesn't factually mean anything. Strong low, weak highs don't exist in the market, but it is the approach, isn't it? So price comes in, buy, and your whole entire thing is right there. That's your entire model, if you will. So that was what it was. Now, I took this buy, and unfortunately that would have been a 26R. It didn't work out. It didn't pan out, but something even better happened, and I'm about to show you guys that right in a second. So we took this buy. It was a 1 to 9 ratio. Price went up, came back down. Now, why did I look for a buy here? Now, let me show you guys something real quick. Let me take a sip of my chai. Let's just see what time we're on right now. 21 minutes, that's fine. That's usually shorter than a lot of my other videos. Give me a second, guys. And okay, before I sip my chai, because I want to take a bit of a longer sip, this entry that I took, let me just clear out my chart real quick, man. Just for you guys real quick. Let me clear out my chart. Okay, so this entry that I took, okay, let me tell you the confluences. Let me move my chai. Let me tell you guys the confluences. And while I'm sipping my chai, I want you guys to sort of think for yourselves. All right. First confluence was okay, right? Of course, all of this has to do with the whole bullish QM, right? We don't even need to mention that. It's all because, I'm even looking for a buy in this area because of the bullish QM. You get what I'm trying to say? So the NY kill zone had to do with the DXY divergence. Okay, and guys, I'm about to show you guys all of this stuff in just a second, right? So let me take a little bit of a sip of my tea. So yes, I did use correlation for this trade, if you guys are wondering. All right, man. Let's get right into it. So, NY kill zone. Let's get rid of that first. Not get rid of, my bad. Let's take care of that real quick as well. So let me go to the 1 hour so it's easier. NY kill zone. 7 p.m. Malaysian time. Again, Malaysian time. Just convert the PM to AM. It's New York time. And you can go all the way to midnight if you want. Let's just go to midnight then. It makes no freaking difference. It's just the entire window. If you guys want to discipline yourself to trade smaller times of windows, so you're reducing your chances of trading opportunities, but you're also reducing the chances of you losing because you're having a smaller period of time to trade. So you're reducing a lot of stuff, but you're getting more refinement, if you will, more discipline. So yeah, over here we have ourselves the 7, we have ourselves the 12 window. It opens at 7, it goes all the way up to 2 a.m. Malaysian time or 2 p.m. New York time, whatever, man. So let's get into this, man. In here, what I saw is very, very simple. Now, that's the New York kill zone. That's done. The DXY divergence. Okay, let's talk about this. Guys, this line, do not get confused. This line is just the 15-minute bullish OB. In fact, what I think I should do, give me 1 second, guys. I apologize. I apologize for going to, so many different time frames. Give me a second. I'm just going to write this right here. Okay, cool. Let me go back to the 1 hour. Now, let me tell you guys exactly what I saw. Now, you guys know it's within a kill zone. I'm going to delete this, okay? So, this low when price came down. Stop me out. Stop me out, break even, though. I didn't lose anything. I, in fact, gained some money because I actually took my profit over here, but then I got stopped out, break even. Cool, whatever. We get that. Why I looked for a buy again is because of this. Okay, price came down. Let's monitor this real quick. Monitor this. Okay, we have this is a low. Price comes down and stop out. See that? It makes a lower low based off of liquidity. It's not a structural lower low. It's just based off of liquidity. It stop hunted. It made a low that's lower than the previous one, right? See how it's slanting downwards? It's lower. Now when I went to the DXY real quick, hold on. What's the date on this? This is 30th December. Go to the DXY. 30th December. My bad. Where you at? 30th December. There we go. Oh man, where was it? No. Oh, that is. I got it. Right. So now let me talk to you guys real quick. This is the exact same thing we saw in Euro USD. Now do not get confused, please. Okay. I'm gonna go to Euro USD now. I'm gonna talk you guys through this. Euro USD. Can you see how this low is lower than the previous one? So it's stop hunted, right? It's stop hunted. Let me go to the DXY, right? But can you see over here though, it didn't do that stop hunting. It didn't do that. You see how EU was like that? Okay, so if you guys are wondering, right, if you guys haven't watched any freaking smart money or Euro or ICT videos, please go and do that. First off, don't come to me in the comment section. Avi, what's a QM? Bro, it's, you know what I mean? You should know this stuff. I'm not trying to get angry. I'm just telling you guys you should know this stuff, you know? So when Euro USD is meant to move, I hope I'm using this the right way. Yeah. Euro USD is meant to move inversely to DXY. So if people say, oh, this pair moves directly with DXY, that means that if DXY goes up, you speculate that pair that's moving directly goes up as well. But when a pair is moving inversely to DXY, it means that when DXY is going up, you speculate that pair that's moving inversely is going to go down or make a low. So just like that, you can see how Euro USD made, look, let me go Euro USD real quick, okay? Euro USD made a low, right? So what should DXY do? If Euro USD made a low like that, what should the DXY do? If Euro USD stop hunted, what should DXY do? DXY should stop hunt, but the buy side, right? So if Euro USD does this, if Euro USD, boom, just that in itself. I'm not okay. Fine. Let's let Euro USD does that. See, it's lower low. What should DXY do? DXY should probably do something like, again, this is all just speculation. This is all theories. It doesn't have to work this way, right? But that's what I went on. Listen, you guys can clown me all you want in the comments, man. But this is what I use on that day and on some days, on several occasions, and it's worked. I don't use it very often, but I did, and I have, right? This is the Euro USD making a lower low. DXY should make a higher high. But what if the DXY, boom, failed to make a higher high? That is a sort of break in it. Not sort of. It is a break in correlation. You know what I mean? And this indicates, let me tell you guys real quick, put you on some game on ICT. When Euro USD makes a lower low and DXY should make a higher high, but it doesn't. So Euro USD makes a lower low, DXY fails to make a higher high. That indicates that Euro USD is stop hunting. It's hunting the stops, in this case of the buyers, and DXY is potentially gonna smart money sell, right? This is all ICT stuff, credit to the man, right? I can talk my shit on him, but when it comes to certain things, I have to respect, and I'm going to do that, you know? Okay, now let me walk you guys through that again. So if Euro USD excuse me, makes a lower low, DXY should make a higher high. So then it's working inversely like it should, right? The machine is working in tandem, right? But if Euro USD makes a lower low and DXY fails to make a higher high, that means that Euro USD stop hunting, right? And DXY is probably gonna smart money, boom, sell off, right? So what if right now, just a little bit of practice. What if I don't know, what if this right here on the left hand side, what if this is DXY? What if DXY does this? Okay, but Euro USD does some shit like this, which is just a different way, right? What does this mean? So this is EU, okay? This is EU. In red is EU, okay? The one without red is DXY. So DXY made a higher high. What should EU do? EU should make a lower low, but it didn't though. It failed to make a lower low. What does that mean? That means the dollar index is stop hunting whilst, right? The dollar index is stop hunting whilst Euro USD is smart money buying. Again, it's you're speculating. It's a theory, right? Euro USD would be smart money buying, right? So that is what I used here, okay? Basically, to put things, simply, that's what I used here. So you can see Euro USD made a lower low, right? Correct? USD made a lower low, right? So what do I expect DXY to do in an ideal scenario? If it were to work inversely, what do I expect DXY to do? Euro USD made a lower low. What should DXY do? Make a higher high. No, not make a lower low. No, it should make a higher high. It's inverse. It's opposite. Look, if Euro USD, let's say 1 and 2 are opposite. Or let's say 1 and 0 are opposite. Euro USD prints 1. What should DXY print? 0, not 1. You know, it's opposite. It's complete opposite. So if Euro USD goes low, DXY should go high. That's what should happen. But in this case, Euro USD made a lower low, but DXY though failed to make a higher high. It should be like that. No, but it doesn't do that though. So what does this mean? This means to me that the DXY is smart money selling, whilst Euro USD is stop hunting. So all I did was very simple. Once price took this liquidity, right here, this is what I mean by sometimes I do very strong, very liquidity centric plays. It doesn't always, I have a lower win rate doing this stuff. And again, that could just be because I don't do it often enough, right? But I think a lot of that win rate, quote unquote, happens when you also add the whole structured thing. But that's just my personal opinion. You guys don't have to believe me, right? But anyway, what happened was it took that liquidity and I realized, hold on a minute, during that very moment when price made that lower low, why didn't DXY take that high, bro? Why didn't DXY take the high? At that very moment that Euro USD went and took the low, DXY didn't inch up and take this. I was like, hold on a minute, that's a divergence, right? And this is happening during the New York session. So what did I do? I didn't just buy, right? I looked at the lower time frame for a formation of an imbalance. Any kind of imbalance. It could be an IPA. It could be a bullish OB, for example. So let's go 1 minute and see what happened. Oh, I pray to the Lord I can show you. No, I can't. Oh my God, I really want to show you guys this. Oh, that's so effed up, you know. That's so messed up. Bro, that's so messed up. Okay, you guys who have, you know what I mean, TradingView Premium, man, I'm so sorry, bro. I'm really, really so sorry. Go to your TradingView Premium. Go to your M1 time frame right here. Man, I apologize, guys. I apologize. Took the liquidity, right? This was where price created the lower low on the Euro USD. Again, guys, look at the date. 30th December, right? Make the lower low on Euro USD, but then DXY failed to make a higher high, meaning Euro USD stop hunting and DXY smart money selling. That's my speculation. So when I went to the lower time frame on the M1, let me tell you guys what I saw though, okay? On the M1, price made a bullish order block. Just a bullish order block, like this, sort of like this. Just like this. See a sell and then a buy, just like that, like just a sell and a buy. That's it. No, like even here there's like a little break of structure kind of thing. None of that stuff. It literally just made a bullish OB, and I just bought on the retest of that bullish OB. So for example, if like, I can't, bro. I can't. I'm so sorry. I'm really genuinely sorry for that. Please, guys, check your M1. There's a bullish OB. See this candle? Okay, you see this gray white candle, right? This black candle here. This gray white candle. I just bought on the touch because in this black candle was a bullish OB. I just bought on the touch. So the RR was freaking insane. Like that was like the biggest RR of this month, maybe. Yeah, something along those lines of that. It was like massive, bro, you know. And so I had that, and then my first target, oops, my bad, my first target was obviously this, right? If you want to be super safe, especially seeing this RR, okay, let me be very honest with you. Let me be dead honest with you. That was not my stop loss. This is my stop loss, okay? I always like to add, when it gets like 1.7, 1.5 pips, I always like to add more stops to it because I can afford it. It's freaking, you know what I mean? You want to even put it 2.5, that's fine for you, you know. And but legit, again, as I said, I took this trade. On God, I took this trade. On my life, I took this trade. It's on my Telegram, bro, right? Go ahead and check that out. And that was the reason why, based off of that divergence. So based off of this divergence, you can get like mad RR trades. It's just that again, maybe it's high win rate for you, but for me personally at this very moment, because I don't spend too much time doing these kind of trades, my win rate isn't as high as if I were to take a normal structure trade. Like let's say out of 10 trades I take like this, I'll be straight up with you guys, 4 would freaking lose. I'm straight up with you guys. But okay, maybe 5 would lose, like a 50% win rate. Yeah, 4 to 5. I'm being straight up and honest with you guys, man. I'm being super honest. But the reason why I stay on top is thanks to this goddamn RR. Right? This is freaking, you know what I mean, insane RR. Right? Thanks to this, you know, because I understand where my stop is, because I understand, right, that this is responsible for that Euro USD stop hunt. You know, the one where I said how Euro USD stop hunting and DXY is smart money selling? This the stop hunt. That's what I consider it to be, at least. So if you guys don't trust this low to hold, that's fine. You can always have a bigger stop loss, or 2.5, 3, whatever. I'm not here to tell you that stuff. I'm telling you guys how I did it, genuinely. That's how I did it. Now, why did I target up here and not just this liquidity? Hey, you can target just this liquidity, but what I figured was that this high failed to make a lower low because price came down, right? Took the liquidity and immediately started rallying up. So I was like, that's a high that failed to make a lower low. That was my first take profit, right? So I would take 50% over there, for example. I'm giving you guys an intraday example here. 50% at this high. After that, boom, right up there. That's no cap, no joke. 34R. That's no joke, bro. I'll do, you know what I mean? Right? So that was the next logical take profit. I wanted to go for this guy over here, but unfortunately I got stopped out at BE. So I entered again because of those reasons that I just mentioned, right? I entered again. That was my first take profit. Second one right up here. Okay? And if you guys missed this trade, Avi, that's not, give me a sec. Okay. Oh, Avi, that's not consistent enough for me, man. I'm trying to learn some form of model from you that's consistent. That, you know, this whole divergence thing, like if you're saying even you have a 50% win rate, I don't, by the way, have a much higher one on this divergence thing. I have a little bit of a higher one, but you guys are like, I want something more simple or something more, you know, like for sure. You know what I mean? Very simple, bro. You saw the stop hunt. What do you look for next? A freaking break of structure. And what happens then? You have yourself a bullish QM. So let's go and see what happens if you missed Avi's entry. Let's go to 5 real quick. Referring to myself in the third person has to be like one of, if not the cringiest things I've ever done, bro. All right, look, this low stop hunted, right? Am I right? Took stops from these guys. Boom, break of structure. What next? Liquidity. If you guys can't see this as liquidity, that's fine. Go to the 1 minute. Oh, I don't think I can go to the 1 minute, can I? I can't. Let's go to the 3. You definitely can go 3. Yeah, there we go. Right? You see that? If you guys, you know what I mean, like it's in your plan to say, Avi, I think, you know what, the divergence thing, I don't quite get it just yet. I think let me just focus on the whole QM thing. There you go. There's the freaking QM thing that you also want to focus on. Is right there. Took the liquidity, broke the structure. In fact, on the 3 minute, this on 3 minute, right? Yeah. On the 3 minute, that would be, in my opinion, the more accurate bit of structure. Oh, Avi, it didn't break the top structure. No, I never said it needed to break. No one said it needed to break the top structure. The last lower high that formed the manipulation. This is the manipulation. Last lower high. Look, high, boom, lower high, boom, lower high, boom, manipulation. That's the last lower high that formed it. You guys can mark the top one if you want, but I'm just saying that's what I marked, right? Or that's what I would mark as a break of structure. And then that's the liquidity. Price comes back. So what happened now? You have yourself a break of structure. What does that mean, Avi? That means, say it with me, after every break of structure and manipulation, what does that mean? You have yourself a new POI. Let's go to the 15. Right? This is literal back testing for you guys because I've not done this. You have yourself a 15-minute IPA. Let's go to the 5 because it's a little bit unrefined. Let's go to the 5. You have yourself a 5-minute OB. So you can just mark it like this and literally just enter based off of the 5-minute OB because you know that this is a logical area. Excuse me. This is a logical area for you to buy at. This low took liquidity, broke structure, being induced. Wow, fantastic. Another bit of inducement. Price comes back. 5-minute OB balances that out and goes. Let's see if you were to, I don't think if you were to have done the 2.5 pip, you would have actually hit anything here. Yeah, you wouldn't have. Yeah, you definitely wouldn't have. All the way down here. Yeah, you definitely wouldn't have. If you wanted to do, you know, like that little 2.5 pip thing, yeah, you wouldn't have actually hit anything. But yeah, as you can see, price comes back right here, and that will be your buy. If you, again, I have no idea why you would go break even here, but again, your rules is your rules, and I respect that. But if I were to enter here, let me tell you where I personally would want to go break even. Let me just give you my own personal opinion, right? I will go break even right here. Why? Because this is the weak high. You know what I mean? That big time frame structure, right? That's the high on a higher time frame, of course. On a higher time frame, that's the high that caused the manipulation. Avi, but just now you said this is the high that caused the manipulation. That's the high I was looking at for a break of structure, bro. You get what I'm trying to say? That high has already been broken. It's done. That's the entire reason why we're looking at this area is thanks to that high being broken. But I'm looking at this high because that's like that, you know what I mean? That big TP kind of area. So when price comes down to here and you buy and, you know, price rallies up and then comes back to your entry and you get stopped out at BE because you put it at BE, that's your own thing, man. It is what it is. I'm not saying it's your fault. If you're following your rules, it's not your fault. Your props to you. But I would have just gone break even right here. Right? On the flip side of things, because I had an entry right here, I had an entry. Where do you think I went break even at? I went break even when price broke this structure. When price broke this structure, boom, break even. I'm done. That's it. You know what I mean? Especially because it's a high risk entry. I would consider it an early / high risk entry because, you know, there's no structure break and stuff like that. But if you guys already got the structure break, man, that's your return to OB. You know what I mean? SH, BMS, inducement, return to OB. And she goes, where's your target going to be at? And so, yeah, I mean, I'm not trying to flex my RR here, man. That's literally not what I'm trying to do. I'm just gonna, but I'm gonna show you guys. I'm gonna show you guys what the RR roughly was, right? Somewhere along those lines. And then I had a 2 pip stop. I know for a fact. I saw it was like 1.5 pip SL. I was like, bro, I'm not, you know what I mean? Like, I'm not that greedy, bro. I mean, I can be greedy, sure, but I'm not that greedy, you know? And so that was the entry, and that was roughly the stop. That was my first take profit, week high, right? 1 to 22. Let's assume I took 50%. And the next one here, right? And let's assume I took another 50%, being 100%, and I'm done at 34R, collectively, of course. And that's that. That's it. I'm done. And we will cover this in a different video where price basically takes liquidity, right? Rallies up during the New York close. There was an M5 bearish QM. Boom, she drops. That's it. It's another 30R trade. And I'm going to show you guys how this was. Oh, yeah. This was a bigger. Okay, would you believe me if I told you this was a bigger RR trade than this one? No joke. Like, you guys are, oh my god, Hafiz, it's 1.72 pip stop. How can that be bigger? This is a bigger RR trade, and I actually held it to that RR because I'm going to show you guys how in the next video. But I hope you guys understood this video, man, and especially the whole divergence thing. If you guys are not in tune with that, that's perfectly fine, man. Again, out of like 10 trades that I may take, my divergence trades are maybe 1, 2. No joke, no joke. That's how rarely I use it, which is why you can see how I say, even if I truly did, hypothetically speaking, have a 50% win rate using that divergence method, right? The one where the EU stop hunts and the DXY, you know what I mean? A smart money sells or buys. Even if I did have a 50% win rate, out of 10 trades that I'm taking in smart money concepts, I'm only using this divergence thing for like 2 because it rarely ever comes to my head to be like, oh yeah, I'm gonna actually do it. You know what I mean? Because I'm not as comfortable with it, and I'm being real with you guys here. I'm not as comfortable with it as I am with just the regular old structure thing because I've used that for so long, bro. And so I'm very comfortable with it is what I'm trying to say. Anyway, man, I hope you guys enjoyed this video. Sorry if I'm talking for too long, man. 40 minutes already, but I think this video is very, how do I say this? A lot of stuff that we've covered in today's video. I mean, wouldn't you guys agree? We've covered a lot of stuff, but I hope you guys understand it, man. Have a wonderful day or night, wherever you guys are at. And I'm back to drinking chai, so hopefully there's a new Avi. But nah, man. All right, you guys have a wonderful day, man. Peace. I'm not trying to take any more of you guys' time. Peace, peace, peace.